Till then, I want to go across and invite Mr. Ashishkumar Chauhan, the Managing Director and CEO of the Bombay Stock Exchange, BSE, right here on Business Prime Time. Thank you, Mr. Chauhan. Always a pleasure chatting with you. This is Nantara in New Delhi. We're seeing challenges being faced in some core streams in the earlier part of the year, in H1. Does that continue to weigh in on your third quarter performance? Are some of them now receding and maybe stabilizing? Could you dovetail that bit for us, please?
So basically, if you take Q3, it has had around 8% higher income than Q2 and around 23% higher profits compared to Q2. So effectively, in some ways, you can say that Q1, Q2 weaknesses have been to some extent have stabilized, and we have started doing better compared to Q1 and Q2. Having said that, why did we have slight downturn in Q1 and Q2 is because of two reasons. One is the IPOs did not come up as many as what happened in the previous year, that is 2017-18 as a whole, and that was a bumper year for the entire market. And so this year, in fact, very few IPOs have come in, and that has reduced our income in the IPO front. On the transaction charges front, our overall transaction charges, large portion comes from small stock charges, which went down in value over last 2 quarters, and that's where we had a basic downturn in Q1 and Q2. But Q3, things have stabilized. In fact, somewhere it has started moving up, and that's where we have done well. Of course, BSE Star MF, which is the mutual fund platform, has started also kicking in terms of the revenues. It was the first year of the Star MF charging for the services to mutual funds, and I'm happy to report that almost all mutual funds have started paying up, and that's where basically we are now having a sort of a situation where Q3 is better than Q1 and Q2, and Q3 would have been even better in terms of the net profit and things if we had did not have to take a write-off against the ILFX exposure which we had within BSE as well as in our employee provident fund trust, and because of that our profits have been marked down by almost 7.5 crores. Otherwise, the net profit would have been even substantially higher if we did not have to take that write-off.
Mr. Chauhan, the currency market share was lost for the second consecutive quarter. Even the cash equity market share is down, and it's down in single digits. How do you see this panning out? What are your plans to arrest that market share loss?
See, in currency, our market shares have in a way stabilized compared to the competition. You might recall in 2013 and 2014, we started with 0% market share. And in last 4.5 years, we have been able to come up to the level where we are the largest. Or last quarter we were around 48% market share. So effectively, if the volumes go up in the market, our volumes go up. If they go down, they go down in a way. On the equity side, it is the other way around, that our volumes have been reasonably steady or slightly going up. But in terms of our market share, we have gone down because of the fact that we do not have the derivatives in equities. And if the derivatives you don't trade equities. So that's where our volumes being reasonably good, still we have been losing market share. While as in currencies, we have been able to hold on to the market share, which has been a heartening thing. In bond distribution, we have become much larger than what we were before earlier. In SME also, we are becoming again very large. In Star MF, the mutual fund distribution, we are now pretty much 90% of the exchange distributed market, and so there are many areas in which we are scoring well, and some of them are now becoming even revenue accretive. So hopefully going forward, the revenues coming from them would be much larger than anything we have seen before.
So you have several growth engines besides Star MF in your kitty. How do you see the SME platform, insurance, bond, INX contributing over the next 12-18 months?
Yeah, basically the way we look at it is in 12 to 15 months, Star MF remains to be the largest going forward. SME is chugging along nicely. We have now around 280 companies listed, out of which 50 have gone to the main board, but around 60 or more are in pipeline. So there is a reasonably good pipeline for SME, and SME segment has been profitable from day one. So effectively, we are hopeful that it will continue to be profitable. But to give you what I call non-linear payoff, SME wouldn't be able to do, while as the Star MF would be able to. In bonds, our current earnings are not that high, and we do not expect that to happen going forward because of the fierce competition amongst exchanges in garnering business, and we have been successful in getting 70% plus business in bond distribution. Similarly, India International Exchange, although we have got 75-80% market share, our revenues are close to zero probably because of the fact that what we receive is only on listing fees of bonds. On the transaction charges, we end up spending money because of the fact that SEBI has approved liquidity enhancement scheme for payment for order flow, as it is known, in GIFT City, and so competition not only doesn't charge but actually pays for order flow. So we are also forced to do that, and so we'll continue to sort of have that fierce competition going forward in the GIFT City, and so effectively the way we look at it is in next say 18 months to 36 months, the new revenue levers or new revenue engines coming up would be in say insurance distribution as and when we get approval, even power trading, but both we will be minority shareholders.
So as a part of your focus area in FY20, can you lay out the recovery being aimed in the main core areas and any strategy that you would be tweaking in?
See, basically the exchanges work under tremendous sort of regulatory frameworks, and so to give unilateral numbers by exchanges is a difficult thing. What we can provide is basically great services, great technology, great distribution, better products, and then it's up to people to trade. Now, usually when you trade equity derivatives in a place, you trade equity also there. And if one more algorithm is placed on that exchange, then the percentage of the other exchange looks smaller because that exchange will have slightly more trading volume going forward on both sides, in derivatives as well as equities. And that's what you have seen over last 5-7 years since the co-location facilities have been allowed, and BSE has lost market share continuously. That doesn't mean BSE has lost actually the absolute volumes.
Okay, Mr. Chauhan, I take your point, and here's wishing you all the very best. We look forward to more interactions with you right here on ET Now.